The current live price for Datavault AI Inc., ticker DVLT, is $1.45, reflecting a very strong intraday gain of plus 5.86% since the market opened this morning, Friday, November 7th, 2025. This move is significant, not just because of the percentage jump on a relatively volatile stock, but because it continues to push back against the immediate pressure that has defined its trading over the last couple of weeks. The expectation for a stock like DVLT, which operates in the complex and often scrutinized microcap AI and data tokenization space, is typically for sharp, temporary spikes followed by an equally sharp and often deeper retreat. This current price action challenges that narrative, holding relatively firm even after a tumultuous recent period. The surprising insight here is the stock's resilience above the $1.20 support level, suggesting that the recent flurry of highly material corporate announcements is actually gaining traction with enough retail and institutional buyers to establish a new higher floor, which is exactly the kind of structural shift long-term investors look for. The general belief about Datavault AI, especially among those who only glance at the headlines or trading charts, is that it is a highly speculative, low-priced stock with a history of extreme volatility and a business model that is difficult to parse, a classic momentum play where the risk-to-reward ratio is tilted precariously toward the risk side. They see a stock that hit a 52-week low of $0.25 and a high of $4.10, and they rightfully categorize it as a wild ride. This general skepticism is rooted in the company's past financial performance, which has shown negative earnings per share of negative $0.65 and an operating expense that has dramatically outpaced its minimal revenue in recent periods, creating a significant net loss. For those who follow a strict fundamental-only approach to investing, perhaps using a tool like Schwab Intelligent Portfolios or a standard Fidelity Investments account, Datavault AI simply would not register as a suitable candidate. They would immediately flag the company's high debt-to-equity ratio, currently around 51.8%, as a major red flag, and the negative cash flow would confirm their hesitations. However, the deeper reality is that the Datavault AI story has fundamentally changed in the last 60 days, driven by a series of catalysts that have yet to be fully absorbed by the broader market. And this is where the current price stability above $1.20 becomes more interesting. The daily movement, with a trading volume of nearly 24 million shares today and a market capitalization now sitting around $458 million, is a clear indicator of institutional activity and increased retail interest. Recently, we've seen hedge funds like AMH Equity Ltd. and SG Americas Securities LLC increase their positions, signaling institutional entry, albeit in relatively small dollar amounts given the share price. On the flip side, several insiders, including the CEO, have executed sales, which always raises eyebrows, but in the context of the company's capital restructuring, might represent a planned monetization of holdings rather than a loss of faith in the long-term project. The key takeaway from the recent price swings is the direct reaction to news flow. For instance, the stock experienced a significant drop following a short seller report, but the company's immediate and aggressive formal response, complete with plans for legal action and the retention of high-profile legal counsel, prevented a total collapse and led to a quick, partial recovery. This corporate assertiveness is a new factor in the company's operating profile and acts as a stabilizing force that was previously absent. The market is effectively trading on the success of the company's aggressive patent enforcement and data exchange rollout, which are brand new narratives. The major tension that is fueling this specific Datavault AI stock movement, the real insight the broader public is missing, is the dramatic capital and strategic realignment the company has executed since late September 2025. This wasn't a minor equity raise. It was a comprehensive multi-part transformation of the company's balance sheet and operational focus. The headline-grabbing move was the $150 million strategic investment commitment from Scilex Holding Company, with an initial tranche already closed. This funding, executed partly in Bitcoin, is earmarked specifically for building out a proprietary supercomputer infrastructure. A high-performance computing capability is an absolute prerequisite for competing seriously in the AI data monetization space, and this commitment immediately tackles the single biggest constraint for a small-cap tech firm: capital for infrastructure. Furthermore, the company successfully converted $13.3 million of convertible debt, which substantially cleans up the balance sheet and reduces the threat of toxic debt overhangs, an issue that had plagued the stock for quite some time and was a constant source of downward pressure. The market's perception of Datavault AI's stability has improved significantly due to these moves, and the stock's current trading range reflects that shift from a highly distressed microcap to a funded, if still highly speculative, growth play. Beyond the capital structure, the strategic shift is equally important. Datavault AI has announced a multi-million-dollar resource commitment from IBM, including the allocation of an estimated 20,000 hours of engineering and technical sales expertise. This partnership with IBM, a giant in the technology world and a key player in the generative AI market, is an endorsement that provides the blue-chip seal of approval that smaller companies often struggle to obtain. It is a form of credibility that is more valuable than almost any cash investment. IBM is essentially betting its time, resources, and credibility on Datavault AI's data exchange platform and its ability to monetize complex real-world assets. This alliance directly ties the Datavault AI story to the multi-trillion-dollar generative AI growth story, moving it out of the pure penny stock category and into the much more exciting software infrastructure sector, where it is now increasingly being benchmarked against names like NVIDIA stock, a comparison that generates significant retail enthusiasm. The core business model of Datavault AI is fundamentally two-pronged, split into an acoustic science division and a data science division. But the true current focus is overwhelmingly on the latter, which includes the information data exchange platform. The Acoustic Science Division operates under the WISA brand and deals with wireless HD sound transmission technologies. While this provides a small legacy revenue stream, the Data Science Division is where the growth and speculation are concentrated. This platform is designed for the valuation and secure monetization of assets by creating digital twins and enabling the licensing of name, image, and likeness by securely attaching physical real-world objects to immutable metadata objects, utilizing Web 3.0 and high-performance computing capabilities. In plainer terms, they are building the plumbing and the marketplace for data tokenization. They are attempting to be the trusted intermediary where complex data, everything from genomic information to political donation records to tokenized real-world assets like unmined gold, can be securely exchanged and monetized. This is a highly ambitious, regulatory-sensitive business, and the sheer scope is why the stock price is prone to such wild swings. The recent $10 million worldwide exclusive license agreement with Scilex to tokenize and monetize real-world assets in genomic and drug data perfectly illustrates this model. This is not simple software. This is a highly specialized intellectual property-driven approach to data commerce. Past performance, such as the $2.67 million in revenue reported in 2024 with significant losses, reflects a company in its pre-monetization heavy investment phase. The market is betting on the future realization of revenue from these massive licensing deals and exchange fees, which is the tension between the current reality of small revenue and large losses and the expectation of massive future growth. Looking ahead, the future outlook for Datavault AI is characterized by a high-stakes, all-or-nothing execution risk. The company has essentially laid out a clear roadmap that promises significant revenue milestones but hinges entirely on the successful rollout and adoption of its independent data exchanges. They have incorporated 4 new Delaware-based data exchanges: including an international elements exchange for real-world assets and an American political exchange for political donations. Management has publicly guided for Q4 2025 revenue of $12 to $15 million, and most importantly, expects 2026 revenue to exceed the prior $40 to $50 million target. For a stock with a $458 million market cap and a history of low single-digit millions in annual revenue, achieving even the low end of that 2026 target would be fundamentally transformative and would instantly justify a much higher stock price, likely closer to the analyst consensus price target of $7. This is the expectation. The reality check, however, is that these revenue figures rely heavily on the collection of milestone and licensing payments, which can easily be delayed or derailed by regulatory hurdles, market acceptance, or execution missteps. The recently announced partnership with Rodney's Comedy Club, while seemingly small, is a tangible sign of the Verify